Thanks for clicking. Canada's proposed regulations on the banks are cruel to first-time homebuyers. This was the message coming from Lepage and its CEO, Phil Soper, in a widely publicized report, calling an end to the real estate correction, saying it was turning a corner. Yet the part of the report that was widely publicized was the turning the corner part, not so much the part that criticized the Office of the Superintendent of Financial Institutions, OSFI, for wanting to implement new regulations on the banks.
That's just a straight shooter with upper management written all over him.
Yet the warning from Lepage comes as OSFI is getting ready to introduce new regulations on the banking sector, and, on Thursday, warned about potential risks to Canada's banks as mortgage amortizations are continually extended. So what I want to do today is go over the report from Lepage, specifically that part which says the new regulations coming down from OSFI are going to be cruel for first-time homebuyers, take a look at the new regulations coming down from OSFI, and then discuss what to look for next. As we'll see today, OSFI is considering some fairly sizable changes to Canada's mortgage market, which will obviously have a big impact on our real estate market going forward. We will have an update out on those regulations when they are released. Click like and subscribe if you want to get those updates, but for now, let's get into this report. On to the release from Lepage. While the brokerage is predicting that Canada's real estate market has turned a corner, today I want to focus on their warning that additional regulation coming from OSFI would be cruel to first-time homebuyers. Specifically, the report warns that were OSFI to place new hurdles in the path of young Canadians' pursuit of home ownership now, in an environment where rates are high and likely to fall, that would be turning a blind eye to the macroeconomic environment and unnecessarily cruel. Further, says CEO Phil Soper, were OSFI to introduce these new regulations, it would force many homebuyers into the unregulated B-lender market. So what Lepage is saying is that if OSFI were to come in with any additional regulations for the banks, it would unnecessarily hurt first-time homebuyers who have been shut out of the market over the past few years.
I'm looking out for you, kid.
And Phil Soper has a history of genuine concern for first-time homebuyers. If you'll remember, in June of 2021, he suggested that first-time buyers take a hard look at variable rate mortgages, as historically studies say they perform better and rates don't rise very quickly. Soper neglected to mention that the study he's quoting recommends first-time buyers not take a variable rate mortgage, but that's a discussion for another time. Shortly after these comments were made in June of 2021, and obviously not all because of Phil Soper, in July of 2021, over half of new mortgages being taken out were that of variable rates. Fast forward to 2023, and 80% of holders of variable rate mortgages have hit their trigger rate. A lot of borrowers aren't even making their minimum payments, with the difference being tacked on to the principal amount of their loan owing. And OSFI is warning about the long-term risks of these banks providing workarounds for holders of variable rate mortgages. As such, in January, OSFI announced that it was looking into tougher regulations on the banks, looking at tougher regulations on the amount and type of mortgages they can hold. Among the proposed restrictions, OSFI is looking at loan-to-income and debt-to-income restrictions on the banks, restricting the amount of high loan-to-income loans that can be held on their books, restricting the amount of high debt service cost loans that can be held on the bank's books, and is looking at more stringent affordability tests for holders of short-term mortgages and holders of variable rate mortgages. So, if you're getting a variable rate mortgage, you might be tested by the banks much more stringently than you would be if you were getting that of a fixed rate. Consultations on these new rules were open until April 14th, and we're expecting to get the results of those consultations sometime soon. And while Phil Soper is calling these potential new regulations cruel, OSFI, ahead of the release of the new regulations, is doubling down. While the banking sector acknowledges that Canada's default rate, Canada's arrears rate, is currently low, it says that it wouldn't be doing its job as a prudent regulator if it didn't recognize that past credit performance doesn't predict future performance. So just because things are okay now doesn't mean things will be okay in the future.
Total bullshit.
Indeed, the regulator noted last week that low delinquency rates can quickly turn, as we saw in the 2008 global financial crisis in the US. Further, while OSFI recognized that lenders increasing amortizations is indeed helping borrowers stay in their homes during this period of higher interest rates, the regulator warned that these longer loans are not without risk, as they keep borrowers in higher debt for longer and have them paying higher interest payments.
Not at all what I intended.
So, in summary, we have OSFI considering tougher regulations on the banks which took on riskier mortgages throughout the pandemic, riskier mortgages that were very much being pushed by certain segments of the real estate industry.
Get out of control,
and you become an embarrassment to yourself and everybody else.
And while these new regulations, if they come to fruition, will definitely work to cool down the real estate market, as it will limit the amount of riskier loans that banks can hold on their books, OSFI has said in the past that the housing market is not their concern. Peter Routledge, in January, addressing calls from the real estate industry to remove the stress test, said that OSFI's job is not to think about housing demand. OSFI's job is to protect the banks, to protect the system from becoming over-leveraged and experiencing a 2008-style downturn in our banking system. Whether or not OSFI is going to introduce these new regulations remains to be seen. As we discussed when we talked about the release of the Canadian budget and the government wanting the banks to extend amortizations, not only for holders of variable rate mortgages, but also at renewal time for holders of fixed rate mortgages, it's not clear as of yet if the new government guidelines are going to mix with what OSFI is proposing. With that said, when OSFI does come out with their proposed changes, we'll obviously have an update out on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.